So today, we're going to be going over a brief introduction, really understanding federal student loans, student loan forgiveness options, income-driven repayment plans and the importance they have on your public service loan forgiveness qualifications, pandemic-related relief, how to take action, and then next steps. Towards the end, we will leave it open to a couple questions that we will answer live. So today, I am Ashley Galuba. I will be your host today, and I'm representing FinPath. I have invited Aitana Ferez here from Savi, our partner in student loan debt relief options. She is also the Senior UX and Partnership Associate. Aitana, thank you so much for joining us today.
Yes, Ash, thank you for having me.
So I think we'll just go ahead and dive right into understanding federal student loans.
Great. So thank you all for joining. I'm really excited to be able to present this portion of the presentation to you all. Really, I just think the biggest thing that I can express as we jump into this presentation is that from this, I hope you all gain a better understanding of maybe where you fit in the realm of student loans, whether federally focused or you have a portion of private loans as well, and ultimately understand, how to access tools like Savi from FinPath and how exploring and navigating and figuring out optimization for your student loans now is obviously going to allow you to put your best foot forward when student loan payments resume for federal loans, and also when you're looking to make other changes or explore other aspects of financial goals that you're interested in looking to do. Go ahead and go to the next slide. So just like kind of an overview of what's going on with student loans right now. I think the biggest thing here is obviously this number in the left-hand corner is pretty blinding as far as the amount of student loan debt that there is. But with that being said, it's also important to take into consideration, how it stacks up against other debt, the average amount of debt that individuals carry, and then of course, what people are expected to contribute month to month on their student loans. Why I think these facts and figures are important is because student loan payments, as you can see on the right-hand corner here, they basically rival potentially, a credit card payment, a monthly payment on a car, whether that's a lease or, just paying down a car that you financed. And then ultimately, average student loan debt being $32,000 roughly, that is an average number. That's not necessarily taking into consideration the extreme highs or the extreme lows, but with individuals carrying that amount of debt, it's important that they are well informed on their opportunities to save, and more importantly, potentially take advantage of forgiveness, should that be an option, depending on what you work in, whether you're a teacher, public service employee, or if you're simply just looking to maximize, how much you can save month to month to make other payments and, put money towards 403Bs, or, future savings accounts in general. A little bit about the federal student loan landscape. So there are student loan servicers that are contracted by the Department of Education. I'm sure some of you might be familiar with these names. If you want to go ahead and raise your hand, I feel like it's helpful for those of you that do have federal student loans, just to kind of gauge how many people we have here on the call that might be stacked with student loan debt. I see those hand raises rising. So that's really great to see, just to kind of gauge an idea of who's in this realm. Obviously, there are also private lenders. Some of these names actually delve in both arenas. So, for example, Mohila actually services SoFi's private side of their lending. So it can be a bit confusing, but most importantly, what I want to stress here is that these names that you see, including FedLoan as well, and OSLA, and a handful of others that are not on this screen, these are federal servicers that provide individuals at the undergraduate and graduate level, as well as parents taking out loans on behalf of their dependents, with student loans that have flexibility with repayment and also have space for forgiveness should one qualify as eligible. And I'll break that down in the next few slides. But different types of loans qualify for different levels of potential forgiveness and savings. So the most important thing when it comes to loan type is if you have a direct loan that you took out past 2008, October 2008, you're usually in good standing as far as the type of loan that you have to take advantage of flexible repayment with income-driven repayment plans and potential forgiveness. Now, on the other hand, if you have FFEL loans, also typified as Stafford loans, or plus loans, being Parent Plus loans, then there are steps that you would need to take in order for these loans to qualify as eligible for both potential repayment flexibility through income driven repayment plans, as well as loan forgiveness opportunities. Grad Plus loans are the equivalent essentially to a direct loan. They just have a higher interest rate. And so most Grad Plus loans are typified as direct graduate loans, and they are good to go for flexible repayment and potential forgiveness. It's just the FEL and the Parent Plus loan that oftentimes require an extra look or potentially additional steps should you be looking to take advantage of savings, like I said, or those forgiveness opportunities. Income driven repayment and loan forgiveness really go hand in hand, and I'll talk about them at length in the next few slides. But the key point between the two is that they are going to be the kind of name of the game when it comes to savings and taking advantage of, getting rid of your student loans at the end of the day. Income driven repayment plans oftentimes work, and they specifically work based on your debt to income ratio. And so you as a student loan borrower, or you as a borrower on behalf of your dependent as a parent, you're not a one size fits all situation. The repayment plan is really meeting you where you're at in terms of the amount of income that you're bringing in relation to your total debt, and also taking into consideration if your spouse has student loans, if you have additional dependents that you qualify as children, and therefore reducing the payment month to month from there in order to support you and oftentimes save you money month to month and maximize potential forgiveness savings should you qualify as eligible. The last piece on this screen, we oftentimes don't talk a lot about, just because deferment and forbearance options right now, we're in a period where all student loans that are federally held are completely frozen, both on payment and interest accumulating. But as we look towards the end of January 2022, when student loans are set to resume, I think the biggest piece that we want to drive home here is that deferment and forbearance options are oftentimes a last ditch effort, because borrowers can actually maximize a lot of their savings and minimize their payment with an income driven repayment plan. And by doing so, they're not, in fear of entering into default or wage garnishment, and having to, figure out how to rehabilitate their loans back into good standing should one have fallen into one of those situations. So really good segue here. Let's dive right into loan forgiveness and the options that surround that. I'm going to talk both about the public service loan forgiveness program as well as teacher loan forgiveness, because as someone who works in a Title I school, you may qualify for both. As someone who works in a public service kind of space or a nonprofit, you would qualify for the PSLF program. But I think it's important to clarify a few points about both. So one, you as someone who might qualify as eligible understands any information that you might not necessarily have been in the know of. Okay, you know what, I actually need to make sure that I'm employee certifying, or that if I'm a teacher, I need to figure out if I work for a Title I school and, I need to work for at least 5 years consecutively to take advantage of this potential forgiveness. I want to make sure that I clear up any questions that anyone might have around this, these two forgiveness opportunities. So starting with public service loan forgiveness, there's three main pieces in order to qualify as eligible. The first being that qualifying employer piece. So you must work for a nonprofit government organization at any level. 501c3 is really the go-to. If you work for one, then you're good to go here. Certain other non-for-profits also qualify as eligible, but it's more by a case-by-case kind of situation. And you must work at least 30 hours per week. So one question that we actually get a lot is, if you work part-time for one qualifying employer and part-time for another, would that qualify you as an eligible candidate for public service loan forgiveness? And the answer is yes. And with the tool, you'll see, later on, you can actually ensure that you're marking both of your current employers, so you're able to maximize and take advantage of this benefit should it be available to you. In addition to having a qualifying employer, you must also have qualifying loans and be on a qualifying repayment plan. So this goes back to what I was talking about on the last slide, or 2 slides ago, but you must have direct federal student loans. If you have FFEL loans or Parent Plus loans, these loans can qualify as eligible, but you are required to consolidate them. And so, just as a rule of thumb here, if you have direct student loans, you took out post 2008, most likely you're good to go. If not, our tool will actually flag whether or not your loans qualify as eligible for exploring forgiveness and exploring savings through income-driven repayment plans. And if not, we'll work with you to either, decide whether or not paying down your older loans or the loans that don't qualify as eligible first is kind of the path that you want to take, or if consolidation is going to offer you maximized forgiveness and savings. The final piece is that you are on the right repayment plan. So income-driven repayment plans go hand in hand with forgiveness, that is public service loan forgiveness, because in order to qualify as eligible for the PSLF program, you must be on an income-driven repayment plan. And if you have not been on an income-driven repayment plan, but you've been on the 10-year standard repayment plan, we can work with you to facilitate the appropriate documentation to get on track and then ultimately continue forward with an income-driven repayment plan. The most important thing about being on and I'm going to call it an IDR because it's a bit abbreviated here, but an IDR, an income-driven repayment plan, in order to take advantage of loan forgiveness is you're going to be paying the least amount that you're expected to pay each month because it's on that debt to income ratio, as opposed to a graduated or extended plan that starts off pretty small, but then grows significantly over the course of you paying off your student loans. And then you're also most likely going to be paying less than that 10-year repayment plan would expect you to contribute, because through an IDR, you can anticipate to see some portion of savings on your student loans should you qualify as eligible, again, based on your debt to income ratio. So just a few points to highlight here that you'll see at the bottom of this screen. Number one, you must make 120 payments, which is equivalent to 10 years, on your student loans while in an income-driven repayment plan or the 10-year standard repayment plan with qualified loans. Once you hit that 120 payment threshold is when an individual is actually eligible to take advantage of and apply for the PSLF program. Again, with our tool, we're able to kind of show you a map mind of exactly where you're at, how many credits you've earned, and then more importantly, how much further you have to go, or if you're ready to apply for this program. And then student loan forgiveness that is tax-free is completely separate from this. I'm actually going to talk about it in just a few slides, but I think it's important to talk about the different options. But this portion is tax-free, and then there's another type of forgiveness that is also tax-free for the next 5 years. But this forgiveness is not, tacked on as additional income that you may have received previously. Everything that is forgiven through the PSLF program is completely wiped after the 120 payments have been made. And you cannot be in school or in deferment or forbearance or default and making payments that would qualify as eligible. Your loans must be in good standing. And then, of course, if you're an undergrad, it would not count. But if you are a graduate student and you're in school and you have loans from undergrad, there is flexibility to pay on those loans while you're in school if you can, afford the payments, and if obviously you'll see savings and forgiveness on those loan payments that you would be making. So for individuals in additional schooling in graduate school that are looking to pay on their undergraduate loans, we can work with them to ensure that they're getting all the credits that they anticipate to receive while they're pursuing an additional degree.
Perfect. And Itana, could you just clarify for us that during this kind of CARES Act time grace period, if you have not been making payments, does that count towards deferment? How does that kind of work for this?
Yes. So when since last year, March of 2020, Student loans have been in the CARES Act relief pause, and this will go until January 31st of 2022. Borrowers who are eligible for loan forgiveness and have were previously making payments that qualified as eligible, those payments will still count. Um, and and those payments that will count, actually, it's just a matter of once you come out of this period of freeze, we encourage borrowers to work through an employment certification form to ensure that those payments were accurately counted by their servicer, most likely FedLoan, because FedLoan is the servicer that currently facilitates PSLF at this point in time. But with that changing, whichever servicer your loans are moved to, we encourage you to move through one of those forms with them. What's great about the tool is that in addition to working on income driven repayment plans with borrowers, we also are able to provide you with the employment certification forms and directly submit those to your servicer. So that's something we can help you with, especially if you are someone that was on track previously. Now, if you were in default or wage garnishment during this period in time, you would not have been expected to make any payments to get your loans back into good standing. But just like the loan freeze with loans that are in good standing, loans that are in default, in wage garnishment, this period in time of rehabilitation, you would actually be expected to pay nothing in order to get your loans back into good standing. So if you are a borrower that has some loans that are, currently not with your servicer, but are in default, that were previously having, Social Security withholdings from you or withholdings from your paycheck, you can feel free to reach out to our team and we'd be happy to make sure that you're getting back on track and your loans back into good standing. So long
Perfect.
story short, yes, payments made that were not being made right now, $0 payments. If you're on track for PSLF, they count towards the 120 payments you need.
So hopefully everybody has been taking advantage of that. I do have a great question from Krista. And her question is, do you have to work for a Title I school or not for 10 years of payment? Now, public service loan forgiveness, you do not have to be in a Title I school. Again, this is for any type of school district, 501c3, any employees through there, whether you're Title I or not. On the next slide, we will talk about teacher loan forgiveness. And that's where the Title I will come into play.
Yeah, exactly. Thank you, Ashley. So teacher loan forgiveness, it maxes out at $17,500. It can vary depending on what you teach, and that's all kind of outlined here perfectly. Depending on what you teach and at what level you're teaching, you must be a classroom teacher and you must work for a Title I school or a low income educational service agency. Fantastic thing about both the Department of Education as well as our tool, in my opinion, is that both on the FSA website, so the Federal Student Aid website or the Department of Education's website, and in the back end of our tool, we have a directory of all schools that qualify as eligible for teacher loan forgiveness specifically. So based on the information that you provide us when moving throughout the tool, we'll let you know whether or not you qualify as eligible for both public service and teacher loan forgiveness. And then our team will work with you to determine which is going to be the better option for you should you qualify for both. What's really important is that if you take advantage of one, so for example, if you take advantage of teacher loan forgiveness, but you're 8 years into PSLF, those 8 years actually restart at zero. So we want to make sure that whichever is going to offer you the greatest amount of savings and, ultimately the path that you're looking for, that you're taking advantage of that, especially if you are able to pursue more than one option. Teacher loan forgiveness is specific to, again, Title I schools. You must work at least 5 consecutive years. You can work at different schools, but they must be 5 consecutive years with a Title I or low income educational service agency. And one thing, one kind of difference between teacher loan forgiveness and public service loan forgiveness is that older loans, being the FFEL loans or Stafford loans, those loans actually do qualify for teacher loan forgiveness as long as they were taken out, this date down here you can see, as long as they were taken out after October 1st of 1998. And we've run into working with borrowers a handful of times where there's, obviously an issue with date with teacher loan forgiveness. And it's simply just a matter of when this program came into existence. That was one of the, caveats that they wrote into being able to shelve out this forgiveness, is that was a cutoff date. So if that is an issue, if you have questions, I encourage you to reach out to our team. We'd love to help you figure out your best options. But for the most part, you'll actually be able to directly see on our platform, kind of an idea of what you can expect savings wise, as well as, if you qualify for more than one opportunity of forgiveness.
So, Itana, I guess what you're saying, and just to help with the chat a little bit, even if you've gotten forgiveness in the past, there's still potential to qualify for more.
Yes, yep, exactly. The only thing is that when it comes to teacher loan forgiveness, you can qualify for the higher echelon as well as the lower echelon. So there's a $5,000 for individuals who I believe work in the elementary setting in the arts or liberal arts, kind of teaching English, reading. And then for STEM subjects, that's oftentimes where you see the higher threshold of where someone might be able to receive forgiveness. If you've taught in both settings, you might be able to qualify for both. But when you exhaust forgiveness from one opportunity, let's say you take advantage of the full $17,500 that you can get with teacher loan forgiveness, then if you are looking to also take advantage of public service loan forgiveness, your time clock starts again at 0. So the 5 consecutive years you worked as a teacher, they don't count towards PSLF anymore. They are now, you now have to work another 10 years in order to take advantage of PSLF. Great. Are there any other questions that I can answer, Ashley, before I jump into income-driven repayment plan?
I do have one more great question that came in. So of the 120 payments that have to be once a month, can you make multiple payments in that month to count towards your 120?
No, you cannot. It must be one payment on time, full monthly payment, whatever you're expected to contribute. And I will actually say that if you make a stronger payment than what you're expected to contribute, we have run into issues with servicers miscounting credits. So, and that's no fault of the borrower. And actually it's not a hard fix. All the servicer needs to go back and do is really actually count the credits appropriately. But for borrowers making payments plus, so payments that they're expected to make, and then an additional amount of money on top of that, it can kind of throw off what your count is as far as eligible payments. And so we want to make sure that borrowers are obviously paying what they're expected to pay. And if they don't need to pay more, or if they don't need to pay more, to have that peace of mind that they're not. So everything is counted accurately. Okay, so income-driven repayment plans, obviously, there's a little bit of nuanced information out there about what different repayment plans there exist and how to take advantage of it. And I think there's just a few things here that will really clear up any questions that any of you might have about income-driven repayment plans in and of themselves. So below this screen, you can see 4 different options. We have revised pay-as-you-earn, income-based repayment, and income contingent repayment. Now, oftentimes when borrowers are thinking about income-driven repayment plans, they think only one, and they think income-based repayment. And that's typically because most servicers will just put a borrower in an income-based repayment. A little fun fact here is actually FFEL loans and Stafford loans can qualify for income-based repayment, and they won't count towards any potential forgiveness. The payments won't accrue in order to hit that 120 mark. And so it's kind of a misnomer because the borrower is, convinced they're in the right repayment plan, but, the issue is actually the loan type. It has nothing to do with the repayment plan. So the reason why there are 4 different repayment plans, I truthfully cannot say that I know, but what I believe to be the reason and what has worked for our borrowers and what has worked for myself as a student loan borrower is that these different repayment plans work with different borrowers to save them money. They have equations built into them. So each one is kind of function to support a different kind of borrower differently. For example, income contingent repayment specifically serves borrowers that are that also have spouses with student loan debt. So if you have a spouse that has student loan debt, you also have student loan debt, ICR is going to be the plan that is probably going to provide you with the greatest amount of savings month to month. Income-based repayment is pretty standard. It's about 15% of your discretionary income every year. And that it goes the same for both revised pay as you earn and, well, actually just revised pay as you earn. Now, pay as you earn for newer borrowers is actually about 10 to 15% of your discretionary income. So it's lower, and it oftentimes works with borrowers that are probably early career borrowers or just getting started, lower income than what they would be probably further along in their career. And one thing that's specific why I say newer borrowers is that actually borrowers after 2012 on the pay as you earn plan are only expected to pay about 10% of their discretionary income as opposed to borrowers previous to that time. There was kind of an overhaul of student loan policy back in 2012 that also accounted for an additional program called TEPSLF, Temporary Expanded Public Service Loan Forgiveness. So that's why it works in favor of newer borrowers. The reasoning behind that, I cannot necessarily tell you, but that is why some borrowers will see a lower payment on certain repayment plans, as well as when you actually go into your portal and you figure out your different repayment plans. Some borrowers are eligible to take advantage of repay and pay as an option, and some really are just able to explore IBR or repay. So it works differently depending on your loans. And I think the takeaway from this is that, yes, it's taking into consideration your debt to income ratio, but ultimately all of these options are going back to not only your debt to income ratio, but more importantly, your loan type. And that's really going to determine what you're eligible for. I know we kind of touched on this, so it shouldn't be too much, but I will talk briefly about the pandemic related relief and what exactly is going on with student loans as we continue to remain in this kind of limbo period with the freeze on both interest and federal student loan payments at this time. So previously, the suspension date was actually supposed to end in this month on September 30th of 2021. But in lieu of everything going on with student loans, in lieu of still kind of being in this pandemic state, we are now looking at the firm date for student loans to resume as January 31st of 2022. So what this means is that up until that point in time, all loans that are federally held will continue to see a waiver of interest and payment. For example, I looked at my student loans today and my payment is not due until February 17th of 2022. So just like normal, everyone will probably see a different resume date, but it will be following that January 31st date. This time in suspension, as answered earlier, does count towards loan forgiveness if you're already on track. If you're not on track, you can also ensure that you're working on an employment certification form, either with our team or on your own if you know how to do so, to then count any payments that would count towards public service loan forgiveness. So let's say you started teaching, during the pandemic or right after the spring that the pandemic started and did not know that this was something that would apply to you. We can work to ensure that retroactive payments are counted towards PSLF. Because ultimately, from March of last year to January 31st, you would have received almost about 1/6 of the way towards taking advantage of loan forgiveness altogether, which is pretty significant. And we just want to make sure that borrowers are actually able to maximize that opportunity. Like I said, also, if your loans are in wage garnishment or default, they're no longer with your servicer, then we encourage you to also explore on your own or again, connect with our team to figure out if you can get your loans back into good standing with loan rehabilitation. This is a one-time option. And again, payments on loan rehabilitation at this time are actually $0. Just like your payments on your student loans would be until January 31st. So now is the time to act if this is a situation that you are experiencing. Finally, this goes hand in hand with that last note, and I already mentioned it, but involuntary collections such as wage garnishment and tax and social security withholding should have been halted on student loans. So if for some reason you were wrongfully, taken money out of your paycheck, or any of your income from your tax return was held by the government, then you can absolutely reach out to us and we can connect you with either an ombudsman or your servicer to ensure that that issue is remedied.
Perfect. And Itana, can you expand a little bit on any groups you think that might have a little extra forgiveness coming their way? For example, those close to retirement, or any other demographic that you see maybe getting a little bit more forgiveness or a little bit of bigger chunk of the pot.
Yes, as far as like if policy changes on public service. Okay. At this point in time, we're still not sure if there will be, there's been talked about both the 10,000 threshold and the $50,000 threshold of potential savings or potential forgiveness that is going to be distributed for student loan borrowers. If it does come, I can say that it most likely will come again in the form of savings for those with federal student loans. So, if you're here and if you have federal student loans and, there are additional forgiveness opportunities that are pushed out to all borrowers, that it will most likely come only to those and not to those who have private loans. As far as demographic, I can't say that I've necessarily heard anything about specific demographics being the ones that are going to receive that first. But I will say that if you sign up with Savvy through the FinPath platform, we actually send out newsletters every time anything about policy changes. So, we're keeping you up to date on the latest, and more importantly, we're keeping you up to date about information that may impact you specifically as a borrower as opposed to someone else. So if teacher loan forgiveness were to change, we would update, obviously all of our users, and then those teachers that are impacted, we would encourage them to reach out to our team or go into their dashboard and, connect with customer success that way, or, edit anything in their own Savvy profile. So everything is up to date and it's reflecting any changes that might come down the pipeline of, if a teacher loan forgiveness, additional forgiveness, package is passed, or if everyone gets, 10,000 in forgiveness, what kind of documentation needs to be fulfilled in order to take advantage of that opportunity.
Thank you, Itana.
Of course. Okay, so that's really kind of the education piece as far as student loans policy and what's going on with the pandemic is concerned with at this point in time. From here on out, I'm really going to be talking about how Savvy is, we're partnered with TCG through the FinPath platform to be able to bring our technology to all of you who might benefit from it. Whether it's you, your spouse, your dependent, whoever is really kind of the one strapped with student loans and looking to optimize their repayment. A little bit about us. So these are just some facts and figures again. On average, we save borrowers about $156 a month on their student loan repayment. This is pretty significant, especially if you're looking to expand what you're contributing towards your retirement or just simply free up some funds month to month. Most of these savings are found through income-driven repayment plans and helping borrowers really ensure that they're on the best plan for themselves. Over a lifetime, obviously we find borrowers about $28,000 in either forgiveness or savings by figuring out and navigating this repayment plan option. And I think the most important thing here is that the majority of borrowers that we work with are actually eligible for forgiveness. And so if you are someone who is eligible for forgiveness and you feel like you're running through the gambit of your different options and you just can't simply navigate, or you want to ensure that you're on the right track, that's really what our tool is here to do. Whether you're 5 years along the line of potential forgiveness or your first year of working and you may or may not qualify, we want you to know that you can use our platform to ensure that you're on track. And then ultimately, if you use it to facilitate any documentation, you have our team to connect with should you have one-off questions that you think are really kind of specific to you as a student loan borrower and your situation.
Perfect. So I guess what's really sums it up is if you're on that path to forgiveness, what our goal is to get you on the lowest, average monthly repayment possible, right? So that you're paying as little possible and you're getting the most forgiven as you can.
Mhm. Yeah. Um, so this is exactly what you need to do in order to, take that next step, especially if you do qualify as eligible, which I know a majority of you probably do. And you must certify any of your payments. So that's something that we facilitate on our end. And then it's not required to be completed annually by any means. We encourage borrowers to do it every 12 months. So they see, 12 months of payments, 12 months of working. Okay, I'm on track. But you actually must get this certification signed by your employer. What's great about our platform is actually we do all of this digitally. So because of the pandemic, some people may or may not always be in office. And so it's pretty simple and straightforward. And it actually operates the same as us helping you figure out your repayment plan. Our employment certification form is done in the exact same kind of way. Application, you can apply for forgiveness once you've hit that 120 mark. And on our platform, you can actually see how far along you're tracking. So we give you kind of a countdown of how many credits you've earned towards PSLF and how many more you need until you hit that, 120 mark and you can actually apply. And yep, exactly. So we recommend that you get your forms signed annually. And then you send your forms. If you don't use Savvy to send your forms, then as you see here on this screen, absolutely send it by certified mail or, fax it from your employer somewhere safe, fax it directly to the number that we provide on our platform or that you have on your most recent statement. And then of course, make a copy if you're doing it, you know, uh, physically as opposed to digitally. So, how we help borrowers, we help you check your eligibility and qualifications for both forgiveness opportunities, primarily PSLF and TLF. If you qualify for temporary expanded public service loan forgiveness, which is the same as public service loan forgiveness, but it accounts for other repayment plans as opposed to income driven repayment plans. We can help you see if you might be on track to take advantage of that. Any of those will work with you directly. And then more importantly, we'll help you see kind of a personalized option of what you can expect repayment and forgiveness wise. Because again, student loans are not a one size fits all option. And so we want to meet you where you're at in terms of, okay, this is what you're expected to contribute. This is what you've previously been contributing. And this is kind of why we've come to that number. How does that number shake out from the information that you've provided us? Every year, we'll keep you up to date on yearly recertification and repayment, as well as any new programs and policy changes. So, in this sense, we kind of compare ourselves to a TurboTax of student loans because just like taxes, student loans really require a deep dive once a year. And we like to think that our platform is kind of taking, not so much of the thinking out of that, but also still providing you with the information and know how that you need to understand your student loans. And then finally, once you use the Savvy tool, if you sign up with our Essential platform, everything that you do can be digitally submitted on your behalf, just like TurboTax. And you can have the opportunity to connect with our student loan experts on a one-on-one basis if need be. But everything that you see here on the left-hand side that is highlighted as free is completely available to each and every one of you as just by being a TCG FinPath user.
Thank you, Aitana. And there is a certain level of one-on-one support that you can still receive through the free tool. Again, our financial coaches are here at your disposal anytime you guys need. But that one-on-one support is really for people in complex situations, right? So I know I've talked with someone before, they were actually taken advantage of and making payments to an illegitimate servicer. So they're going through, court fees or court dates and things like that. So their situation is a little bit more complex, and that's where you might want some of that more professional one-on-one support for those more complex situations.
Yeah. For borrowers when you move throughout the tool, if you have loans that are in default and they flag a bounce screen or something, you have the opportunity to connect with our CS team oftentimes directly over email. And then if need be, we're happy to jump on a call because ultimately we are a social impact startup and our goal is to help as many student loan borrowers. It really just comes to, for the typical borrower, when you're looking to utilize our digital platform, that's when you would probably decide between Essential or DIY, which we'll dive into here in just a bit.
Absolutely. And again, so the DIY is completely free. You can pretty much do everything yourself if you want. The additional cost is really just a white glove service. Like Aitana said, if you want someone to submit those forms for you every year so that you don't have to worry about it, that is what you're paying for.
Yep. So breakdown of the differences here. With our free assessment tool, you're able to determine any qualification for both forgiveness and savings month to month. And then you can generate and view any and all of the repayment options that you have available to you. What we'll provide you with is the information for your servicer to fax or mail those documents directly to them. And again, this is something that you can do. And if you have one-off questions, you can feel free to send in a support ticket. But it's really kind of like just providing you with the know-how for borrowers who are familiar with PSLF and income-driven repayment plans. We encourage them to take advantage of this. But even if you're familiar or if you're not familiar at all, and you just kind of want that extra level of support, like Ashley said, that white glove kind of service to be able to connect with our student loan experts, then at that point in time, we would suggest that you utilize our Essential platform, which is here. It is $60 a year, which is discounted from $90 originally, thanks to our partnership with FinPath. And basically with Savi-Essential, we do all of kind of the procurement of your documentation for you. So we process all savings and forgiveness forms digitally. We also review them. So if for some reason we see that there is an issue based on the information that you provided throughout the platform and the documents that you've attached, that we're highlighting that, connecting with you to ensure, any information that maybe is incorrect is remedied before it's sent to your servicer. So, in 2 weeks to 2 months, when you hear back from your servicer, you're not met with this document is being denied because for some reason, your income doesn't match up against your tax return or whatever it may be. We also provide the one-on-one support options should you have, one-off questions or you want to connect with one of our student loan experts to figure out next steps. However, we do map all of your next steps out on your dashboard. And then we can manage e-file any of the other documentation that is required, whether that's TLF documentation, whether you're being required to submit additional documentation to verify your income as well as your employment. We've run into some of those hurdles before with borrowers. And then finally, providing you with that ongoing application market or monitoring. So every year, if we see policy changes, expansion of forgiveness that requires documentation to be filled out, we're working with you proactively to take advantage of that. And then ultimately, if you realize that utilizing the Savi-Essential is not providing you with that seal of approval that you wanted on your student loans or the peace of mind or the savings that you expected, we offer 100% money back guarantee because we stand by our product. And most importantly, we've seen it prove to work in support of borrowers. But either way, whether you're using the DIY or Essential, our goal is simply to help you optimize your options when it comes to student loans.
Thank you, Aitana. Could you clarify if that $60 per year is per family or is that per person?
Yeah, so it's per individual that is going to take advantage of the procurement of the forms. If you are simply using the platform for yourself to, kind of use it as a calculator or in a DIY fashion, then you can use that on as many users as possible. But when you submit documentation, it is going to be per individual.
Thank you for answering that question.
Yes. And I will say, actually, I don't know if we have a screenshot of it in here, but there is a refer your family and friends. So if you want to refer someone to Savi, you can actually take advantage of a discount. If you refer 3 people, you actually get 50% off of Savi for the next year. So, there's some ways to kind of maximize that. If you have 3 people in your family, you can send them all the link and then you'll get 50% off Savi. So we can dive right into next steps in order for you all to take advantage of the tool if you're interested, or at least better understand how to access it?
So first, obviously, I'm going to say what I said at the beginning. Go and register for your FinPath account. You can access this tool through your FinPath account. It is the tile called Student Debt Relief. So after you register and everything, you can click on it, and these screenshots that will kind of walk you through are what it'll be like when you first, kind of log into the tool and are starting to get acquainted with it.
Great. So once you do that and you sign up for a Savvy account, you will be brought to your dashboard. This dashboard really helps you kind of navigate to whatever it is that you're looking to do with your account itself. So if you want more information about what's going on with the resuming of payments and if policy has changed, we actually have over here on the announcement tab, we have an option to sign up for any future webinars that we do with all of our user base. If you want to reach out to support because you have a question, you can always do that. But most people will go ahead and continue to application to get started and figure out their options when it comes to student loans. Once you go ahead and dive into the platform itself, we have a very strong TurboTax-like feel with our platform. So you're answering questions that pertain directly to you as a student loan borrower. And that goes back to the one size fits all is not a thing with student loans because, the state that you live in, the number of dependents that you have, whether or not you have a spouse with student loans or without student loans, that's all going to determine what you're expected to pay month to month. And it's not going to mimic or be the same as any of your colleagues or even your spouse or your dependent who might also be strapped with student loans. We want to ensure that all the information that you're putting in is accurate. So obviously we want to ensure that, is your adjusted gross income, has it changed from the year previous? Has it gone up? Has it gone down due to economic hardships from the pandemic? And the reason why we want to do this is because ultimately it's going to allow us to better understand, okay, are there additional savings that you might see this year because of changes to your income? Or, has your income maintained and are you just, had you just not been aware of potential savings with different repayment options in the past? Employment is a key aspect in figuring out whether or not you're eligible for forgiveness or not. And you can see that here. So once you input your employment information, we're able to determine, okay, is this borrower going to again qualify for multiple forms of forgiveness, teacher loan forgiveness, public service loan forgiveness? If not, if you don't qualify for forgiveness, then let's be sure when we provide this borrower with plan options that we're also showing their payoff date and what they can expect to pay over the course of their loan payments in and of themselves. You can see here on this screen, once a borrower qualifies for eligible for forgiveness, we'll let them know previous, and all of this is in the DIY form. None of this is paid up until this point in time. So you can figure out your eligibility even before you necessarily continue through the rest of the tool or sync your loans. Once you have gone through the portion of the tool where you've put in information about your debt to income ratio, as well as your employment, we verify your student loans. We encourage borrowers to sync their loans using Plaid. So it's pretty straightforward. All you use is the login credentials that you use to go to your servicer's site. But if for some reason you don't know those credentials or you don't necessarily want to link it, then you have the opportunity to add your loans manually, or you can add them using an NSLDS file. What's great about this platform is that Savvy never has access to your student loan information, just simply the high level information that you can see here in this small screenshot. So the outstanding balance, and then of course the loan type, which is going to determine your eligibility for different repayment options. But just like this service is also used by Venmo and Cash App and just the same, and it's also used by major banks for the most part. What's great is that at no point in time is the information crossing over to Savvy. It's existing, simply still with your servicer. So all of it exists there, and any updates that your servicer makes, it will update in real time on the Savvy platform because you synced your student loans using this technology. An additional piece that you can absolutely take advantage of is adding your education. So if you add your school, what we'll do is we'll also see if through our database if there are any additional post-grad forgiveness opportunities for certain individuals. Education also plays a unique role in borrowers who may qualify for state forgiveness because it may pertain to opportunities there. So that's a separate option that we will encourage borrowers to explore based on their university or high school or where they reside. That may account for expanded forgiveness outside the PSLF and TLF realm. And then one aspect of Savvy that we've recently connected is if you do decide, again, both of these options are completely up to you as the borrower. But I recently did the second option where I synced my bank account. And basically what this does is allow borrowers, if they're interested, to kind of maximize forgiveness. So should you see any changes in income, Savvy can provide you with insights on how to better approach your student loan repayment. But again, both education and syncing your bank for free loan monitoring are completely up to you as a borrower. The final piece is that you're brought to our plan option screen. And again, up until this point in time, everything is completely free to you, the user, so you're able to have access to all of it. And this is where we'll kind of show you the differences between the different repayment plans that you may or may not qualify for. Once you select a plan, you'll actually be brought directly to the paywall. And I think if we go to the next screen, okay, that's probably it. But anyways, so after this screen, you'll select an option, and that is when you're brought to the paywall where you can decide between using DIY or Essential. So up until this point in time, Savvy is completely free. You're able to see all the options. More importantly, you're able to see forgiveness and what you're expected to contribute month to month. And then once you decide, the pay plan is the plan that I'm going to move forward with, or the ICR plan, or I'm going to stick with my current repayment plan. Once you select that option, when it comes time to start filling out documentation, Savvy will either do it for you using the Essential or using DIY. We'll provide you with the tools so you can go ahead and navigate that option on your own.
Perfect. So if you guys have any questions about anything we have talked about, you can always schedule a meeting with one of our telewealth advisors or coaches. Again, that link is www.finpathwellness.com/telewealth. Again, our advisors are always available to talk to you and chat a little bit more one-on-one. The Savvy tool is really, really, really helpful for you guys. It is calculators, there's education in there, and it really gives you a picture of what your student loans look like and what your forgiveness options could be and income payment options could be. In this presentation, we really just kind of talked generally because everybody's situation is different. Nobody's is the same. So we strongly encourage getting with one of our coaches or just going through the tool and seeing what's available to you. Does anybody have any questions for us that we can answer at this time? I know we've got a couple people having issues logging into their account. We'll make sure that a registration link is sent to everybody that kind of joined the webinar today so that you guys can register for your free accounts and start using this tool. And then I have another question down here. Is the $60 due all at once? Yes, that is due all at once. It'll be a per year cost.
Yes, exactly. And like I said, refer those family and friends and take advantage of that discount. You can do that directly from your dashboard if you're interested. There is a refer family and friends option from there.
All right. And again, just a couple of highlights of, I know a lot of questions that I get asked out in the field. Public service loan forgiveness does not have to be consecutive years of service. That is for teacher loan forgiveness, and you have to have how many years of what is it for teacher loan forgiveness, Aitana?
5 consecutive.
5 consecutive years for teacher loan forgiveness. That does not count for public service loan forgiveness. That is a completely separate thing. The other item that I get asked a lot is Parent Plus loans. So Aitana showed us in one of the first slides that Parent Plus loans do qualify for this as long as they're, federal loans and they're backed by the right places. So if you are taking out loans for one of your kids going to college right now and you are currently working for a qualified employer, that loan could be eligible for forgiveness. So definitely get with us and see what we can do for you.
Thank you so much, Ashley. Thanks, everyone. And if you have questions, like I said, the best thing you can do is go through the FinPath platform, click on the link, and then sign up for Savi and get started. And then, of course, if you have questions, reach out to our team or one of the financial coaches at TCG.
Perfect. Thank you all so much for joining us this afternoon. I hope you learned something today and hope to see you next time. Thank you guys very much.